So this is the stock. I think anyone who doesn't know anything about the stock market should probably invest in something like this. This is an index fund. They track the 500 top companies, maybe the top 50, but I'm not sure. I think it's 500 in the S&P stock market. And it's essentially everybody in the stock market, primarily in the American stock market, primarily tech companies. You can get indexes that take USA, Canada, Europe, and Asia and combine it, and it's safer. It doesn't fluctuate as much. But this one grows steadily as long as there's not a catastrophe. So here's the chart. Over 10 years, it's made 283%. That's at roughly 11% a year. And as you can see, there's certain dips in it. That's the pandemic. That's when Trump, I think he caused a crash with the tariffs. And that's a little crash with the Iran war. But as you can see, if you look carefully, it's a straight up over time graph. Great for anybody who's young and can hang on to their stock for 30 years. So if you invest 400 of your paycheck, I'll say that again, you invest 400 of your paycheck, every check, you would end up with 2 million in 30 years or 1 million in roughly 25 years. And it's interesting, those last 5 years pretty much double your million. So I'll say that again, $400 per paycheck. And you might say, well, I'm going to starve. But remember that each year you make a little bit more. Every year you make a little bit more. So that 400 will be quite easy to do. So again, if you do 400 per paycheck until age 30, don't worry about all your other setbacks. They'll all be paid for long before your 2 million mark. And on top of that, if you wish at halfway mark, you can just take your money out and you can buy a house. Now, the other thing is every year you're allowed to put something into what's a TFSA. That's a tax-free savings account. And that means all interest you gain is tax-free. So this is very important because right now you have about 20,000 room in your tax-free savings account. And every year you get about 8,000 more, something like that. I think it's 6,500 more. But that's plenty because this here, 400 per paycheck times 26 paychecks is about 8,000. It's a little bit more, 8,000, about 10,000. But that's okay. It means a very small amount will go towards taxes. But because you have this big cushion, you won't catch up for a long time. So essentially, this is just an account that is tax-free. And then you invest in something like this. And this is for a general investment, so people don't have to really know what they're investing in. You're just essentially investing in the U.S. stock market. If you see signs that the U.S. stock market's going to tank, you can instantly sell and invest it in something safer like bonds or in something like energy, something that produces. But even during something like the pandemic, energy took a little hit. So you can just cash it out, wait for the bump to calm down, and then reinvest. So you sell as it's diving and then you rebuy when it's low. I do not recommend crypto. This is a sure thing because it's based on actual companies producing actual products. And there's other indexes. If you don't like the general stock market, you can focus on the NASDAQ index, which is just high tech, which is growing huge now, but it tends to crash. It did in 2000, a huge crash. So generally, the more general you make your investment, the more stable it is, but it won't climb as much. This is a great climber. It's hot. I would highly recommend it for anybody who doesn't know anything about investments. And just invest and sit. You can jump in and sell it if there's a big problem, but otherwise you just invest and sit. Every month you just put in a certain amount of money in the investment and it will grow very, very fast.